Hey folks, David Frost, mystrategicforecast.com. You're here for another episode of Common Sense Market Analysis on Monday, December 15, 2014. You're looking at a daily chart of the SPY, and we had another sell-off / down day in the market. Dow was down 100 points, S&P was down just under 13, NASDAQ was down almost 50, 48 and change. So it was down earlier, more earlier in the day. In fact, let's take a look at an intraday chart just to get a picture of what happened today, and then we'll get on to tomorrow and what goes on from there. So market put in a pretty good, well, actually we gapped up, and then we put in a good hard sell, and we found the bottom right around noon, and then we rallied up a little bit and kind of floundered down the rest of the day. What I'd like to see tomorrow is, let's get back to the daily chart. So what's our downside target? Well, the downside target is now, remember I said the 50-period moving average was a target, and if we get through the 50, my next target was going to be about 196.5, 197, and that's in this area here. Now, I don't know that we get down that far, but we could, and this is very good support because all this chart support here, and then you have a gap window here, which would be 196.73. So I'm going to call this my hopeful bottom for tomorrow if we start down. And what I'd like to see tomorrow, in order to get that end of the year rally started, is I'd like to see a good hard sell early in the morning and then a reversal day on volume, and that would put in a nice low, and hopefully we could take that into the remainder of the year, back up, and benefit from some of the long plays we have on the books for the members, for the subscribers. Okay, speaking of which, before I get on to anything else, I'm going to do a little commercial again because we had an interesting one today, and I gave out a trade alert to members last week on Boeing, and what happened today was interesting because Boeing, let's just go to the hourly chart and we'll see. Okay, look at that. Boeing, after the close today, announced that they're going to have a $12 billion buyback, increase their dividend. I don't know the percentage. I think it may have been 20 or 25%, but don't quote me on that one. And basically, you know, when you look at the daily chart of Boeing, okay, it was very, very oversold, and we came into very good support in this area here. All in through here is good support. This is good support, but this is better support here. And so we should see continued further up move tomorrow in Boeing and beyond. And if we get that rally going into the end of the year, you know, Boeing should be off to the races and get back, not necessarily, it doesn't have to get back to the highs, but we can certainly get back to 130 with no problem and higher. Okay, so let's get back to our normal stuff. The IWM. The IWM was weaker than the S&P today, okay? The Russell 2000 index, or the IWM, was down almost 1% today. It was down a little bit more than the S&P. So, you know, where's the downside in the IWM? Right around the same level as the SPY. This would be a coinciding level. Is that a word? This level would coincide with the S&P, 111.5 roughly. This gap window here, give or take a few pennies, is a good level if we get down there. I don't know that we will, but what I'd like to see is I'd like to see a good hard down in the morning and then a reversal, and that's what we're looking for. So let's get on with some tells of what's going on in the market, right? So let's move over to the VIX, okay? Now, the VIX was very interesting today because the VIX spiked up, and we actually got up. Not only did we get to this gap window that I was telling you about, but we got to the gap fill, which was the other side of the gap, and we touched that right here, and then we pulled back. And what was interesting is, let's go to the intraday chart. What was interesting, look at this. What is that? What was interesting today was that we basically pulled back off the highs while the market was still down in the VIX. And let me go back to the daily because this isn't telling me the whole picture. This is a better picture, okay? The VIX popped up today, and when as the market was still down early in the afternoon, even though it was up, it was down. It wasn't up, but it was climbing back, and then it went back down. And the VIX was pulling back the rest of the day, which I thought was interesting. And if you look, the VIX was finished at $20.09 with a high of $22.79. I don't know where this is. This is probably a fake print. $22.79 was right here. So maybe we didn't get up to that gap fill. Maybe that's a fake print because my my daily high says 22.79. That's interesting. I'm going to have to double check that. I apologize for the confusion, but I'm looking at the number on another platform here, and the high of the day is 22.79. So I don't know what this is. This could be a fake print, and that happens sometimes, or a phony print, or a accidental print, whatever you want to call it. So anyway, so maybe we just did get to this gap window here, and then we pulled back, which is interesting because when we pull back as the market's still down, it's telling you that the fear is coming out of the market, not going into it. Okay, so a lot of those puts that were bought were either being covered or being sold, or maybe calls are being bought. You know, we'll see what happens tomorrow and the next day, but that's an interesting tell, and you need to take note of that. Another tell, and this is a little more complex, another tell is the junk bond index. Now, I thought what was interesting here is, now, I told you about the energy sector, and a lot of the smaller energy plays that are leveraged, that have borrowed a lot of money in order to put their projects on the books and put their projects in play in drilling and exploration, they've borrowed money, and a lot of it was high yield or junk debt. And what happens is the junk bond index today had what I would deem as a reversal day. Okay, we hit a low. We reversed, finished near the high on heavy volume. Almost 18 million shares when average volume is probably about 5 to 6 million shares. The volume's been heavy the last few days on the way down here, but I thought this was very interesting because this is probably going to be deemed the bottoming tail in the JNK, or the junk bond index. So that's a tell. And another tell is, I'm going to bring up Lin Energy. Lin Energy has historically, over the last several years, been one of the darling MLPs that had a good, solid yield. They've had some controversy. There's been some articles both ways about Lin. There's been a couple of bear cases that have been brought about Lin, but nevertheless, it's been taken behind the woodshed, okay? And they had an asset sale that was pending, and I think the market was fearful, in Lin's case at least, that the asset sale wasn't going to go through, and it was like a $2.5 billion deal. Well, after the close today, it was determined, or it was announced, that Lin was completing that asset sale, which is going to be positive for the it's positive for the not the whole sector, but it's positive. It's a positive feeling that business can still get done. And I took a look at the after hours quote before, and the after hours quote was up. Lin was up about 64 cents, and that's a good positive sign. We'll have to see how it plays out tomorrow, but I think that goes hand in hand with the junk bond index. And what you're starting to see is an appetite come in for some of these really, really beaten down energy sector plays, that there's going to be some huge winners in here, and there's going to be a lot of losers too. There's going to be ones that go out of business. But when the junk bond index rallies and Lin's able to get a deal done, it's going to show positive signs for the business or for the industry or the sector. So I just thought that was worth mentioning. And also, while we're on the topic of energy, you know, crude was down another 4% today, down at, it was under 56 today, okay? So, you know, where's the bottom? I think we're getting close. I will tell you that at some point I see 48 on the horizon, $48 a barrel, but not in this move. I really don't see it in this move. I think we're close. Maybe if we can get a down move in the market tomorrow morning, a down move in crude oil, and then a reversal, I think that'll bode well for asset prices to inflate into the end of the year. And that's kind of what I'm looking for. Not saying it's going to happen. I would just like to see it, and that would be a great tell, and that would be a great sign that you can hop on board for an end-of-the-year rally beginning tomorrow. Also, thought I'd make mention of this. A couple things. So, our friend Dennis Gartman, who I mentioned from time to time, was on TV again tonight, and what he was saying was oil at $30 a barrel. Now, that's not going to happen anytime soon, But when you hear things like that, you know that you're closer to a bottom than you're not. And I'm looking for, on another screen here, I'm looking for the article, and it's gone. I had it up and it's gone. And basically what it said was Gartman, he was on Fast Money tonight, and he was calling for $30 a barrel oil. And, he's like a mush. It's a good sign when Gartman says $30 oil, it's probably closer to a buy. And then he also said that he knew that the Russian ruble was going to be getting really sell off and was really going to get crushed as of a few months ago. Well, if that's the case, then how come he didn't tell anybody about it? See, he's just making up stuff as he goes along. It's really disingenuous at best, but that's my take. I'm sure he's a smart guy, and I know he's been successful, but there's no reason to come on TV and make up stories. If you thought the ruble was going to get crushed, then you would have told everybody he looked like a hero. But he didn't do that, so, whatever. Anyway, so another thing that I want to make mention is one of these other guys, and I do like Carl Icahn, and Carl Icahn's, he's an icon is what he is, but he also is calling that says oil's woes may be proof of a junk bond bubble, and that article comes out, and this was on Yahoo Finance today too. That comes out on the same day that this happens. A reversal day in the junk bond index. I just think it's ironic that, even guys like that, come out with comments like that at a bottom or potentially at a bottom. It's just not a long-term bottom, but at least a short-term bottom. So it just happens like that over and over again. You got to pay attention to that stuff because it's usually a good tell. Last thing I'll talk about tonight was gold, because gold got drummed today, and didn't expect it, but nevertheless it still took a pretty good hit, and it came right into this support level here. We'll have to see what tomorrow brings in gold. I still feel there's higher prices ahead into 2015. There's going to be inflation by the central banks in Europe and Japan, and we get all that, but it's going to be volatile, and gold is volatile. So if you own gold already, and I do, you're going to have to sit through some of these big, large moves. I mean, all of a sudden out of nowhere, gold was down like $30 or $29 today. And that's going to happen. But conversely, you're going to find a $40 update like we had last week. So, you just got to be patient with it, and you can't own tons of it at the same time. You accumulate. So a day like today when it's down $30, maybe today, maybe tomorrow, you buy a little bit. Buy a little bit at a time if you really believe, like I do, that the story is that you're going to see inflationary forces push gold higher into 2015. That's my story, and until further notice, that's what I'm going with. And so anyway, hopefully it's helpful. I'm David Frost, mystrategicforecast.com. Thanks for tuning in for another episode of Common Sense Market Analysis.